Hi, Ketki. I hope you're well. So it was pretty crazy in the equity markets last week, including Canada and the States. So what happened?
Simon, yeah, it was a pretty wild week in equities. Obviously, markets closed Friday in pretty much free fall. So, what happened essentially is that last week was defined by one event, um, the Federal Reserve raising their rates, which they raised 50 basis points. So, it wasn't actually an unexpected move. Markets had already priced it in. And initially, markets reacted with jubilation that the rate hikes were not more aggressive. On Wednesday, markets closed on a high note. But very, very quickly on Thursday, the reality seemed to set in again. Markets had to confront many of the same factors that have already, caused a lot of volatility in this quarter and so far this year, which is essentially that investors are worried about an economic slowdown, which is for a lot of reasons. Lockdowns in China that keep getting extended, the Russia-Ukraine crisis that also seems to keep getting extended, supply chain issues, inflation, and of course the fact that central banks globally will need to move very aggressively to tackle inflation.
So thank you for that. So like you said, one thing driving the markets is the global economic slowdown. Well, anyways, the concerns regarding it. Um, should we as Canadians worry about the economy? And what does the recent data tell us?
Yeah, so I think if we look at it in a very macro context, there is going to be a global economic slowdown. The IMF and the World Bank, I think 2 or 3 weeks ago, cut their growth targets for the global economy in 2022, citing, some of the concerns we mentioned, like Russia, Ukraine. Canada, of course, is a part of that. So the Canadian economy also will and has been seeing a slowdown, especially compared to comparable markets, for example, the US, other OECD countries. Um, but with that said, in in a more recent context, the Canadian economy is recovering very well from the coronavirus pandemic, from the various lockdowns. If we look at some of the recent data, we had employment data come out, and employment remains, near record high, unemployment at a near record low. Some of that strength isn't being reflected. As we said, the economy is slowing, so wages aren't really going up. Wages are hardly, I think they're 2.4% year on year, whereas inflation is 6.7%. So Canadians, so to answer that, the economy is recovering well from the pandemic, but Canadians are getting poorer. Some of the top line numbers that do show the economy is recovering are actually what the Bank of Canada will be looking at to guide their policy decision and to see how aggressively they want to raise rates.
Great. I'm glad you closed off with the Bank of Canada, which segues into my next question. The other thing that concerns the market is the aggressive monetary policy tightening globally. What does that path look like for Canada?
Yeah, so I think in Canada also we are going to see very aggressive policy tightening. In recent week, or actually just last week, we've seen very hawkish stance from key central banks, including the Fed in the US, the Bank of England, as well as the Reserve Bank of Australia. So I think it's very clear that global central banks do need to move quickly to tackle inflation. Um, I think 2 or 3 weeks ago, there was a press conference in which the Bank of Canada Governor Tiff Macklem did say the bank is considering another 50 basis point hike at its next meeting on the 1st of June, which is relatively hawkish for the Canadian Central Bank. And the bank has already begun quantitative tightening. So, yes, I think we're going to see a very quick and aggressive monetary policy tightening this year. The Bank of Canada's one job really is to keep inflation in target, and the main tool that they have to do that is monetary policy tightening. So they'll need to move on it very firmly.
Of course. Well, thank you for this. It was very enlightening. And I hope you have a great day.
Thanks, Simon. Good to chat. We'll speak soon.
Bye, Ketki.